Hi everyone, welcome to our market talk. So 2 weeks have passed since our last show, and well, quite a lot to talk about, and a lot of uncertainty in the world. But looks like the U.S. stock market is not really concerned about that. We'll see if it continues. This week is a rollover week, so we had quite erratic moves in the stock market, especially in the indices. But yeah, oil like higher gold reversed when futures reached our target. So I'm sure we will have a lot to talk about. And after a long time, it's been a while. We have Ted with us again. So Ted, looking forward to hear your thoughts and what is happening in the macro picture. Yeah, so let's start the show. So, Ted, how are you? How was your trip, and what is going on?
Yeah, thanks for having me back. Great trip. Spent 3 weeks in UK and France. Particularly enjoyed the France and Annecy riding bikes. So happy to be back. Never really unplugged from the markets, although I wasn't on as much X, but I was kind of paying attention. Reached out to you guys a couple times. So yeah, why don't I share my screen here and kind of walk through what I'm seeing. Um, I guess we're seeing an all-time high soon, but let's check it out. So I thought I'd touch on again, as I usually do, macro regime and policy, and this time I'm going to talk a little bit about market factors and look at what happens historically, or what has happened historically when we have these Middle Eastern conflicts. There've been six over the past since 1990. I thought I'd touch on what happens with some of the major macro assets. So where are we from a macro regime perspective? I was last on May 8th. Since that time, my macro advisory service has gone to Goldilocks, which is a risk on regime. That is a growth up, inflation down regime. And it's arguable that we're kind of in that regime. When you look at just GDP now, which is this sort of real-time nowcast that takes on in oncoming data, we finished Q1 with a slightly negative GDP print of minus 0.3%. Subsequently, we all learned that that has to do with front running of tariffs, inventory bills, and things of that nature. And we see since the most recent print, which was yesterday, the GDP now has gone to 3.4%. So if you look at Q1, Q2, I mean, you're basically running somewhere around 1.6% in terms of first half GDP. So compared to 2.3% end of the last year, we're down some. From an inflation point of view, we had seen CPI in May come out at 2.3%. That was up a little, but below expectations. Market was generally viewed that generally favorably, since they were anticipating more impact from tariffs. Same with core CPI in May. Actual was 2.8. That's the third month in a row. We just ticked along at 2.8. So no apparent increase in inflation from that point of view. True inflation, however, has ticked up. When we last looked at it, it was around 1.8%, showing 2.1% now. We see the five-year forward rate has come down from expectations. So 5 years out, looking at 2.2, market participants are looking at 2.26% inflation. When we look at 1 year forward, we're at 2.38% inflation. So we're not in a terrible inflation regime by any stretch of the imagination. Likewise, when you look at the New York Fed's consumer inflation expectations, plus 3.2%, that's come down as people have realized that tariffs aren't as well. From my perspective, they're not inflationary at all. They're a consumer tax, and so likely these are slowing business activity and are also going to slow inflation over time. But we'll see. The outlier here is ISM services prices. This came out last week. That shot up to 69 from 65 when we last looked at it. So, we've had some pressure in terms of the services side of pricing. Getting to the policy point of view, when you look at I'm going to skip ahead to a slide. So basically, the Fed came out yesterday and said the median projection in the SEP for total PCE inflation this year is 3%, somewhat higher than projected in March. And the median participant projects GDP to rise 1.4% this year and 1.6% next year. So the Fed basically has a stagflationary outlook with inflation rising and growth slowing. When we go back a slide here to here we go. Basically, what the Fed said is that the economy is strong, but there's still uncertainty around tariffs, creating some elevated risks. They pointed to a strong labor market, 4.2%, with wages moderating. PCE inflation, I just touched on that, plus 3% is what the expectation is. Mind you, this is a, quote, data-dependent Fed who's now using projections to make decisions around monetary policy. They held rates at 4.25 to 4.5%, and they expected them to decline to 3.9% by year end. So we're looking at maybe a 50 basis point of cuts between here and the year end. And then they're basically in a wait and see mode and keeping monetary policy, by their own admission, relatively tight, certainly not neutral. When we look at what the other policy dynamics are from the White House, we have tariffs on trading partners of at least 10%, maybe more. Depends how this shakes out. We also have this pending, quote, One Big Beautiful Bill Act. Essentially, what this bill does is it makes tax cuts permanent and increases border and defense spending. It cuts social programs like Medicare and the SNAP, which is a nutrition program for poor people, basically. And it raises the debt ceiling by $4 to $5 trillion, which has been probably the biggest bone of contention around the overall package. So they've tried to increase the debt, ceiling along with passing this continuing resolution as far as the budget is concerned. And so we'll see if this gets passed. We'll talk about the TGA in a minute, but that's something that is providing some wind to our sails in the short term from an equity point of view. Deregulation is to come. And then, of course, Trump has become the global conflict, quote, peacemaker. He's going to solve Russia, Ukraine in a short period of time. Now he's got deeply involved in this Iran and Israel conflict. And then, of course, he's one to bash the Fed and too late Powell on an ongoing basis. So his policy is to keep it chaotic as much as possible. I mentioned the TGA drawdown. So this is a Treasury General account. And as you may recall, we hit the debt ceiling in February. So as a result, this is a checking account basically kept at the Federal Reserve by the United States Treasury. And with no increase in the debt ceiling, the U.S. government's not able to issue new debt. And so basically what they've been doing is drawing down this checking account. And you can see during tax payment time, so the most recent tax payment was in, there was a February payment, and then there's a payment, April payment made, which increased the account. And then also next week's data should reflect the mid-June payment. But basically, this is starting to draw down pretty rapidly. They've got $300 billion left to go. And this is providing some liquidity to the market. And the question is once they increase the debt service or the debt ceiling, they're going to have to restore this TGA account. And when they do that, that will be a negative for flows. Term structure, actually, this had normalized yesterday, but as of today, we've got a little bit of it's generally in contango, but we can see that from a VIX point of view, we've got an increase up until the October timeframe, and then a little bit of a dip here. So we've got still an elevated VIX level. I think the VIX actually was trading today around 22. So there's a heightened level of fear around the primarily the impending conflicts here. Bond vol, however, has been pretty stable, pretty consistent in the mid 90s, and so that's providing some relief for bondholders, I think, or bond investors, that they can not expect their yields to increase by 100 basis points after they buy. And then, of course, tomorrow we have OPEX. Goldman Sachs estimated that this 5.9 trillion of notional options exposure expiring tomorrow, and that's the largest June expiration on record. Some key things to keep in mind is we've got this large open interest of calls at the 6,000 and 60.50 levels. We have a put wall at 59.50 and 5900. And then expiring at the end of the month, we have the JPM, which is the JEHXH call spread. They have short call at 5,900. That could likely serve as a magnet to pull the equity index down. And of course, we close not far from there in futures today. So we'll see what the impact of that is on a go-forward basis. Just want to touch briefly on Middle East before looking at some charts. I did a session with ChatGPT, pulled some data. I basically asked what was the historical performance of various asset classes during conflicts involving the Middle East. And there were 6 events since 1990. The Gulf War in 1990, Afghanistan 2001, Iraq War 2003, Libya 2011, ISIS campaign in 2014, and Yemen support in 2015. The 3 big ones are obviously here: Gulf War, Afghanistan, and Iraq. What we can see from this data is that in the near term, in a 1-month period, we could reasonably expect SPX to be down. The median was 3.15%, but you can see that, if we're looking at something akin to the first 3 conflicts, probably could look at something more than that. But then you see rising, as we move 3 months, 6 months, 1 year, we're looking at positive gains on average 1 year, 12.7%. Oil saw a spike with the Gulf War and the Iraq War. We saw 6.5% up in the first month, and then generally declining over 3 and 6 month period, and then oil up 8.5% 1 year from conflict. Gold, last week we saw gold rally after looking like it wanted to sell off again. It's 1 month performance 3.7%, 3 months 4.5%, over 6 months, and 7% over a year. TLT, not much of a hedge, 1.1% in 1 month, 2%, 3.15%, and 4.75%. And then finally, the dollar, which has been largely a safe haven currency in years past, but doesn't seem to be really functioning as such, although we'll talk about that in a minute. We see the dollar about 1% in a month, 1.6%, 2%, and 2.75%. These are just some things to keep in mind as we sort of meander our way through this weekend, as Trump and Israel and the like decide to make some decisions. And then I'm not going to touch on my positions right now. I just want to touch on some of the big asset classes that we just talked about. When we look at, this is a 3-year chart of SPX. This goes back to the October 2022 lows. This is Fibonacci bands. You can see we're, pressing up against these highs of last year, December, and then in February. And so we're close. You can see we got a nice buy signal down here, which enabled us to get long some of these positions, some of the SPY, at least to have an initial position off the bottom, and then trying to add as we move along through time. And that's been probably one of the more challenging things. This is a daily chart. You can see when you get the signal to buy in this time frame, and then basically where do you start adding to your positions? That's always the challenge when the bull starts to run and skepticism is high and volatility is high, and then volatility starts to come down. And so this is something that we're looking at right now, and we can see that we're in this band somewhere between 60.85 and 57.70. Again, we have a big OPEX tomorrow, which is going to affect this. I'm expecting we could trade down to the 5,900 level, which would be commensurate with that magnetic pull from the JPM whale call short call position. So this is, SPX looking like it needs to base maybe a little bit before moving higher. Of course, crude oil from my work gave me three buy signals, and I took the first two and lost money. I didn't take the last one. And even if I had taken this last one, which was in mid to late May, it gave me a pop, but then, basically came down the next 3 weeks. Very difficult to hold that position with stops set where I have them. So I didn't get long WTIC, although in one of my mean reversion portfolios, I got very long DBC, which is a general commodity index, and that has performed well, and I've been selling into some strength. From the point of view of crude right here, I mean, this has been, if you got the signal to buy here, and then it pulled back to here, and then we started to run, where are you buying? I mean, this thing trades right at the top of the range the entire time. Very difficult to pull the trigger, no dips. And then, here we are, very extended. And so what are you going to do? If you're long crude, shouldn't you be selling some? If you're short, why are you short? I mean, this thing could still rip higher. So we clearly made a very rapid transition into bull market territory from a pretty steep bear. And this is a tough one to own at this point in time, given that any headline could cause it to move in one direction or another. Gold's been giving me headaches for a while in terms of a lot of different sell signals on the weekly chart. It has been persistently bounced back. It's clearly been a strong holding. But I'm looking at, this is through yesterday. I don't have closing prices yet for today on this particular chart service. I'm looking at another sell signal here developing in gold, and so it may well be that it's time to take some of that off. On the other hand, when you look at the daily chart, you can see this nice, if you look at technical analysis at all, you can see this nice rising wedge. You see that we've banged at the top at around 3,400, 3,441, 2, 3 times. This really looks like it may base and then start to rip higher again. So this is something to watch. And I don't usually use technical analysis, but I am looking really at this level here at 3,440. Are we going to break through, and what's the catalyst to break through? I still have a position in gold, and probably as a long-term position, but we'll see what happens with pricing over the next week or so. And then TLT. This is another challenging asset to own. Got a buy signal a couple of weeks ago. What was this? Actually, it was the 30th of May. Added a small position. As you know, my strategy is to use sort of weekly oversold levels and reversal signals and momentum to try to get an initial position and then build that position as we transition from bear market to bull. Clearly, right now we're still in a bear market for TLT, but we have had several positive weeks after that buy signal. So we got long here in the May 30th rather. And I'd love to see this. If we're going to get a move on this, we've got to see a close up over 87.20 to really give you some confidence that we can move to the next level in TLT. But bonds have certainly been a dog and a drag on my performance. But anyway, it is what it is. And then almost finally, US dollar. Right now, we pulled off. We could be getting a buy signal. This needs to get over 80, minus 80 for me to get long the dollar. But basically, we're in a very oversold situation. Again, the dollar looks like it might want to reverse. this is an interesting divergence from a momentum point of view, and so we may well look to get long gold here tomorrow if we get any sort of a move higher in the dollar, and that drags that Williams percent R line higher. Basically looking at the daily chart on the US dollar, I mean, we're basically putting in this double bottom here. And the question is, are we just getting ready to fail? I mean, I think that's the bear case is yes, we're going to make another leg lower. The bull case is we're putting in a dollar. So I think this is, I'm putting in a low. And so this is the real question. What happens now with the dollar? Do we see a reversal after a 10% down move? And then one other last chart for me is just DAX. I don't have today's price, but DAX was down. I think DAX was down about 1% or so. And so this could well be giving us a sell signal this week, which for me, and the asset that I hold that's related to that is EZU. And so that may well be a situation where that causes me to take a pretty large position in EZU and cut that by at least a quarter due to a sell signal. So it isn't a get out signal; it's a reduce exposure signal. And so DAX is something to be paying attention to, since Europe has been great all year. So that's it for me.
Thanks, Ted. DAX will never go down. It's impossible.
So I hear.
Yeah, of course, we're joking. Yeah, good insights as always. Yeah, I really like your view on oil. I mean, if I see someone shorting oil here just because it's at crazy levels and all the signals are showing overbought, which is true, of course, for obvious reasons, but that would be crazy. We are one headline away from those shorts being destroyed. Of course, same applies to longs, also one good headline away. So for those who don't have a position, it would be crazy to initiate here. At least I think so. In the short run, of course, unless your view is very long and very wide. Okay, Raphael, so should we be buying this dip tomorrow or no?
Okay, so yeah, I think a dip is coming, and strangely enough, I will not start the chart sharing with ES. I'm going to start with VIX. So don't be scared. So 2 weeks ago, I was mentioning that we were approaching or about to cross the maximum value of trade of volatility of VIX. So this is the level I gave in the show 2 weeks ago. Basically, it's pretty simple. You want to be the best place to be long is when volatility of VIX is increasing. It's when vol gets crushed and you are riding from the minimum value of trade of vola VIX to the maximum value of trade of vola VIX. This is a very simple environment. You buy, you hold. When we get there, you just get out of your position. Strangely enough, the cross of this value matched the cross of the yearly open for ES, which was, if you remember, our target to get out of the long ES trade. So what happens next? What happens when actually trade of volatility reaches this maximum value of trade? So I went searching for the past times when trade of volatility of VIX actually reached this maximum. So I have 3 days to show you. I will show you on the VIX, and then we're going to explore on ES how the market reacted and which one of the scenario is the most plausible in my opinion. So the first day that matches this criteria, and you can find it by yourself also if you are using my scripts. It's 6th of November, 2015. I'm going to show you. This is that day. This is when actually trade of volatility crossed its maximum value. And usually what you get is trade is starting to turn around, volatility is starting to decrease, and obviously if the volatility of an asset is going down, you've got the asset going up. And in that particular scenario, we started to get a transition of VIX to bullish trend. A period of trendness that lasted from November to a final dip in February. So roughly 3 months. Now let's go to the second time this happened. So that's 2019 03, so March 20th March 2019. It's a French calendar, so of course in English you are using months and dates reverse, but and basically you get the same kind of setup. Obviously less long, less violent, but again the same kind of setup. So you have the switch to bullish trade and trend. So you see here volatility going down, trade of volatility going down, and you get some volatile action until somewhere in this area when actually volatility and trade of volatility start to approach their minimum value, their minimum target. If we start to see this kind of volatility, I will address the targets I will be looking for. But you get a volatile times that last from March 19 to let's say May 19, so roughly 2 months. The last time it happened was 29th May 2020. So this one is a very unique period of time. So we will check it, but I would not put too much weight on that. So what you had was move of vol to long-term top of the range, and actually a grind lower. So the issue of this, and then a transition actually to bullish trade and trend, and finally here the top of this move. The problem with this particular period, which actually expresses exactly the same kind of pattern you want to look for, trade going down, volatility of the asset going down, is the fact that it was actually the COVID crash. It's post-COVID crash. So it was more or less the start of the bottom for VIX before the transition to bullish trade and trend. So this one, we're going to check it, but I would not put too much weight on it due to the fact that we had the crazy move up on VIX just a few months prior. So now let's go to ES and let's try to have a look at what ES looked like and how it behaved during this particular period of time. So let's go to the first one. Okay, so the period is here. What you had was the start of volatile days ahead. So sell off, try to bounce, sell off, try to bounce, and finally a dip to buy. Okay, so the issue I see with this particular setup is that it doesn't resemble the current situation that we have with trade and trend. So I will show you later on where we are with trade and trend, but you can see here the distance between trade and trend is quite quite large. Another thing is the fact that where is it? Yeah, okay. The distance between the low of the range and the long-term low of the range is not that big, and you will see the current situation is much different. So, I mean, I don't see a lot of resemblance with the current situation. Now I will show you the second one, and I believe you will, when I will compare and will show you the current situation, you will see a lot of similarities. Because that's here, somewhere here. Okay, so what it did was you got some kind of volatile sell-off here, and what you have is a trade and trend about to cross. You have a long-term low of the range quite far away from the low of the normal range, and so sell-off around the time we are now, actually in terms of proximity to rollover, and you have low of the long-term range catching up to the low of the normal range, trade and trend cross, and then we have the move up. We have the move up, get some kind of top, and then the sell-off. Okay, so I want you to focus on how trade and trend are behaving. I want you to focus on the long-term low of the range where we are, this kind of dip that you have here with the retest of the low of the range, and I will show you the current situation. So, in my opinion, the situation looks exactly the same. So here you have a trade going down in terms of vol, about to cross a trend. So this is a setup happening here. You have currently red days with retest of the low of the range, and you have the low of the long-term range quite far away from the normal low of the range. So my expectation would be that we should expect this kind of behavior that we had on the 20th of March 2019 until 2 months later. So this is my current thinking regarding what I would expect to happen this summer for volatility and of course for ES. So the way I want to play that is I would expect Friday, Monday to confirm that the low of the range will hold, that we will not get some kind of crash. And I'm actually planning to buy this dip. And when we start to get the low of the long-term range to climb back up, because in my opinion, it's going to happen, and we have the confirmation with the cross of trade and trend, I'm going to add to my long position. And the idea would be to ride until we finally have the confirmation that maybe VIX is about to transition to bullish trade and trend. And you know this setup, and don't worry, I'm going to address it in 2 weeks or in a month or in a month and a half when it starts to materialize. But I think another move up is about to happen. So, and it's about to happen like right fucking now. So that's my thinking currently regarding ES and what I want to see, what I want to do in the next few days. Now let's go to Europe, and actually something quite terrible happened. So the DAX actually broke my volatility trade and trend. So, oops, and CAC did the same. So that's, in my opinion, not very bullish. Okay, so CAC is now entering neutral area for MFR trend. it's breaking low of the range. So you should expect some kind of either let's say I would expect some kind of bounce or something, but it's definitely not looking good. Uh, Volatility is starting to increase. Same on DAX. Volatility is increasing. You have volatility doing, I don't know if you saw, mm, let's zoom. Yeah. So volatility is doing higher high, higher low. That's not very good. So if you were long Europe, I hope that you saw that, and here was actually your exit. Okay. Now DXY. So DXY, I'm actually starting to get the same kind of signal that Ted is getting. And so my tools, what they are saying is trade of volatility is turning. Okay, so that's a very important clue you want to see when you are expecting change in the asset you are watching. So trade of volatility is starting to move down. Trend has not started to move down, but when you have trend starting to move down, the move is already happening. So in my opinion, but I was wrong here. I thought here was the bottom, and it wasn't because we went lower 2 days in a row. But in my opinion, it's confirming the transition. So if you are adventurous, longing the dollar in any shape or form, I don't care how you do it, I think it's a good bet here. And the confirmation you would be looking for and probably to add to your long position would be when a trade actually reaches trend for cross. So you know the setup already, but that would be another place to add. And definitely another place you would be watching is the break of MFR trend. So back to bullish. That would be another one. But I think what Ted is seeing, I'm seeing it too. Now, okay, so it was a joke for a few months, was oil. So with the reject of trend, and finally, fuckingly, it broke back to bullish. So very good if you caught the move. Unfortunately, I was expecting a transition, but I was expecting a transition much later. And especially, they added the geopolitical risk that fueled this break of trend, and you got a retest of the top of the MFR long-term range. But I'm starting to get some sell signals, so I got some the past 2 days actually. I got to sell somewhere here, but it disappeared as it retraced. And here started to get some mega sell. My expectation remains the same. I'm looking to buy when we have the cross of trade and trend of volatility. Okay, so of course I'm getting sell signals, so I'm not going to buy now. My expectation would be to wait at least the low of the range, maybe even MFR trend, and see where we are in the matrix here in terms of vola. But this setup trade of cross of trade and trend is definitely a very good setup for oil, low risk, and it works all the time. So I'm watching. I'm a little sad I didn't catch this whole move. I was playing around with a yearly level from buy on CL, so made some money, but it was much lower. I didn't get to get this move. So yeah, still watching. I like the transition to bullish on MFR trend. Sure, the cap on the top is not good, but the setup is there. I know it works, so I'll be waiting. Now regarding gold, so I'm using JC as a tool. So I mentioned last time that if you were buying as trade was starting to go down and was crossing trend, I think you have a good dip. So if you bought in this area, if you got back in this area, I think you have a good dip. So far, I'm not seeing anything suspicious. The suspiciousness was when we had from here to somewhere here, when volatility was increasing, when we had reached the second mean target I mentioned several months ago. Now everything I see is volatility down, trade of volatility down, trade and trend have crossed. In my opinion, we are back in a buy the dip mode on gold. So yeah, I'm not seeing what Ted is seeing regarding gold, but let's see. Now Bitcoin. So Bitcoin, I think a whole different picture. So if you remember when we took the long Bitcoin trade with Vi, I mentioned that what you want to see in Bitcoin is actually very low vol. So here I drew at the time where you want to see volatility of Bitcoin to be when you want to see some crazy move up on Bitcoin. And you can see anytime volatility of Bitcoin enters this area, that's when the asset is gonna go. Sure, you have to be bullish trend, you have to have a trade below trend on the volatile, but you need low vol. Bitcoin needs no low volatility to rocket. So here, 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 and we had it very recently during the move up here, as we confirm the yearly open reclaim, and this is when actually we went long with the target of 112K that we mentioned the last time. And this is not what we are seeing now, right? Look at volatility in blue. We are definitely, it's not looking like that, right? That's not a bullish, that's not a, sorry, something bullish for Bitcoin. So I'm a little concerned. I'm monitoring that. If it gets back down in this area, I'm gonna chase. But if we stay in this area, no touchy. And I'm gonna conclude with the yields. So something is happening in 30-year. And I don't know if it's gonna propagate in other sorry, the 10-year or the 2-year, but in the 30-year, trade was breached. So you can see here volatility is starting to make higher high, higher low, and it's now bearish trade. Now, will it get back down or will it transition to bearish will it break also the trend? I don't know, but the 30-year is now bearish trade. So its volatility is bullish trade, but the asset is now a bearish trade. It's not materializing yet on the 10-year. So the 10-year is still, the volatility is still below trade, 2-year same. And you can see both of them, they are bullish trade and trend. The assets, they are bullish trade and trend. But it's starting in the 30-year. So if you are watching to buy a dip in bonds, watch that. Do we get propagation to the 10-year also? Maybe the 2-year? That would signify a very good shift in bonds. So yeah, this is my piece. This is what I'm watching, and yeah, most importantly, I'm watching yes, and I'm watching oil to take the move. Yeah, that's it.
Thanks, Raphael. Very interesting. I will have a couple of things to touch because let me share my screen. But for example, I think that gold has approximately 1.5% to the downside. Yes. Okay, now I'm sharing. So 1.5% to the downside, and why it is like that? Because I'm always talking about these levels, and expiration levels, and now we basically need to go to 33, 32, which I showed multiple times how to get the value. So yeah, but 33, 32 would be a major level where it really makes sense to buy gold. I started from gold just because I wanted to give my views, because sometimes I miss that asset, because especially after recent shifts tweets, I'm not really interested in this asset at all. But yeah, so 33, 32 is a place where I would really buy with a tight stop if you are interested in buying and think that it has plenty of upside. So yeah, 33, 32 area to the monthly opening price of 30, 33, 23, which is also a very good level. So for your stops or initiation. And of course, gold futures basically touched the monthly target again 5 days ago, and now we have a dip. My main question is how big this dip will be, because you know that in my process I'm not executing in what I call quote unquote in the middle of nowhere, but of course that nowhere is fractal. So there are levels in shorter time frames, there are levels in longer time frames and targets. But yeah, I would say that if you are not long gold and you want to buy gold, maybe wait a little. Of course, anything can happen, but I would say that magnet is now approximately 33, 32 level. Dollar, of course. So all three of us want to buy the dollar, but Raphael, I hope you were watching the targets for that, because we had an amazing opportunity to buy the dollar, like 5 days ago, 4 days ago. Yeah, I'm not trading currency, so I immediately say that. My currency trading is basically sometimes moving my trading account balances, or buying bills, or just basically exchanging account balances, but I don't trade these things. But yeah, it was a good idea to buy a dollar now. Now watch the 99.440 level on DXY, and if it breaks, yeah, dollar bulls will be very, very happy. But if not, we'll see. And the quarterly picture also is very important, which is actually supporting the bull for now, because of course dollar is down on quarter very much, a lot, of course, because quarterly open for the DXY is here. But basically, if we get a break above the monthly open, you can target the hundreds, yeah, 100 in it easily to have as your first target to sell some. And of course, you will trade some proxies, UUP or other. But yeah, dollar index is was at a very good spot. Now is at a decent spot. I would say that. So yeah, and you can use targets for UUP that are pinned on my profile, because I have not included DXY, because usually it's not tradable unless you trade futures. But UUP is a very popular instrument for people to express their views on the US dollar. So you can use those targets. Now what happened with oil and these? Yeah, it's an interesting topic, and I have plenty of thing here, quote unquote, because yeah, I was also long goal, and on that night I had long oil, sorry, not gold, but on that night when we had this massive rally here, my final position closing price was somewhere here, because for me it looked crazy. And then I woke up, went to bed, and woke up next day. So I thought, Okay, that was fun. Uh, so yeah, I don't have a position, and it was a nice run in the futures markets. I was trading that, but yeah, now I can say one thing. No matter what happens, I mean, oil can go to 120, 130. How people predict can go back to 60. Now we are in a situation where whatever you think, we are actually one headline away from big move, and that big move is, of course, now everyone would expect that, oh, that headline will be something bad and oil will spike. But sometimes instead of bad headline, you get good headlines. So just be aware of that. But here I would not execute. But yeah, quarterly target was reached. First monthly target was basically it was at 70. Market retested it, but yeah, the second target for the month is even higher than here. It's above $80, somewhere from 80 to 81. But yeah, on the big spikes, we have a second target, which would be the quarterly target, and we still have some time for the quarter. So if you get a spike and you see 78.13 break and approaching 79.16, there's also a place to reduce bigly or uh, close it entirely, but depending on your views. But I doubt that many of our viewers have now long positions in oil, unless maybe in some ETFs or whatever. But yeah, my best advice is I I'm repeating myself, but I always say that because it's very important for commodities and the indices. Whatever you are trading, whatever instrument you are using to express your views, ETFs or anything else, watch futures. Futures lead, and it's important. Yeah, so this was oil. Now maybe I will start. I will come back to the usual things that I start my presentations, but actually I was prepared to talk about those instruments after I talk about correlation and everything else, but because Raphael's presentation was very on point, and I thought, okay, I will start from these because otherwise I will forget what I want to add to the point apart from levels. So I hope I did. Yeah, so let's go to ETF because otherwise time zones on TradingView will mess and it will be very hard to watch. Okay, average correlation to the SPY. Average correlation to the SPY. No surprise that we have this run from 20th of May, approximately, but still relatively, and this is, by the way, is a 21 day. So yeah, 21 day. This time I will start from longer time frame, but we are still relatively low. So if we get this correlation spike, you can expect a volatility increase. And actually, that's something that Raphael mentioned also, based on his tools. So yeah, and the 10 day, and then I will quickly just make sure. Minus, amazing. Okay. And this time, because 2 weeks ago we were talking about maybe we can see some signs of vol increasing because of crowdiness, but no, short-term correlations fell basically almost an entire period since our last show, and now we got this small spike, but nothing. And why I always start from this and why it's meaningful to me, because if you add, and this indicator is available on TradingView, so if you add this to some high vol event, so you compare it to a chart of an index or SPY or whatever, you will see that for big moves to happen in a volatile manner, in a volatile way, not grinding lower or higher, but real big moves. I mean, first correlation must reach of levels of 80, 85, and so on. And then when it reaches 80, 85, then you will see usually spikes to 90 and 95, and then it's not good. So it helps you predict. And the principle, I don't draw any lines, but the principle is the same. Like Raphael is usually drawing what's the average, but what are the normal values, or no correlation because it moves from 1 to -1. And this type of correlation rarely goes to deep negative values because it's not really would be interesting to see that. But I just know that below 80, I mean, it's fine. Even if we get a solid sell-off, but that sell-off will be caused if it happens by some external news. And I was talking with Raph and Ted before the show that for now flows are strong, and how to understand that these flows are strong. One of the ways is that for now, no matter what news in the world you get, it's very hard to move this market down. I'm talking about equities now. But yeah, so SPY futures after rollover reached the target, but SPY still has some room to go this month. And if we reach 607 level, well, then all-time highs will come quite fast. I'm sure about that. Because the break of that level will cause an increased momentum. Usually that's how it works. That's why I always stress that don't place limit orders on these targets or levels that I'm showing you. Trade breakouts because it's a momentum target, and the risk with these momentum targets is that you will place a limit order to initiate a position, and then momentum will accelerate on a break against. So that's not the point. That's not how they should be. But yeah, reducing positions here makes sense, makes total sense if you are not holding SPY for your long-term retirement, but you are actively trading it. This level makes really real sense. And then bigger targets are way higher. So of course, after that, our targets will be 61.25 and then 61.66, which will be the previous all-time high. I'm talking about ES levels, but yeah, ES 61.25 is very important, and 61.66 and 60.62 before that, of course, because now we had this dip, so we will see. I will maybe come back to the ES because it's easier for me to show you the levels when I'm actually I show the proper chart, not a ETF with all the dividend payments, dividend adjustments, and no time financing like in futures. So yeah, so my thinking is this: the beauty of the process and how I view the process is that new contract levels are the same, but levels and major zones are the same. So Raphael said you want to buy the dip, and cool. September contract already closed the June rollover gap. If you are using the volume-based rollover, then the gap you should have is on Monday. Depending on your settings and platform, from Monday to Tuesday or from Friday to Monday. I use custom adjustment charts on Sierra charts to check not only volume-based adjusted, but actually when the contract expires. So tomorrow, when June will settle, then I will create also a gap from that to where the September contract closed. But it's not important for now. what I said, a new contract, same level. So if you want to buy, watch 59.49. And I'm sure you know that. So this is, if you are bullish stocks, this is the place to try to initiate something. And I would say this: if you have really short-term positions, so you are looking at days, weeks, and you have no plans to hold for months or whatever. Below 59.49, yes, I would reduce or cover. But that's how I do things, because below 59.49 we will have targets that are way, way, way lower. So my overall opinion, first of all, I never trade rollover weeks when it comes to indices, because capital needs to flow from one contract to another, and first of all, of course, they want to keep that market quite steady during a rollover. Because of that reason, of course, it was not the real case because of these spikes based on news, but rollover week is usually when trading indices and SPY and things like that is not a good idea. And it also makes sense for ETF traders, because, of course, futures rollover week is third Friday of the month, and it's a triple witching or quad witching if you are counting zero DTs for SPX as well. And so yeah, usually best thing you can do if you are really, really active trader, take vacation 4 times a week if you are an active equities trader, because the rollover weeks and quarterly OPEX, I mean, it's not a time to trade equities. Gold, I'm also quite on the bull camp overall, but I want to wait for a dip. And if I miss, I miss. It's also very important mindset thing. Follow the process, and you will not miss anything, because if you follow your process, you will have plenty and plenty of trades in your career. But yeah, I would try to buy on the previous settlement of gold. Oil now, I don't know, unless I see something interesting intraday, but no swing positions for me for sure. I can tell you this. I have targets that are above 80, I have targets that are above 100, and I have targets that are below 40. So let's just see. It's not a case to initiate a position. Bonds, yeah. So bonds is very important thing. And of course, I will start from TLT, but then we will see futures, because bonds rolled quite some time ago, because bonds you roll way, way earlier, because a lot more capital needs to flow up. And but TLT. So we will start with a quarterly, and the target for the quarter, which was generated based on previous quarter, was literally the bottom for now. Orange lines are quarterly targets. So base case was at 87, and bear case was at 83.35. But monthly is for me to short TLT, it needs to go below the pivot, below this gray line, which is a monthly pivot. For now, market can struggle at 87.3, 88 area. So, and actually, we all have biases, and I always tell people, don't trade your bias, don't trade your bias. But yeah, of course, even if I don't trade bias, I can talk about that. I personally think that market will struggle to go way higher in a very short-term period. Now, when it comes to bonds, so at 87.3, I would at least reduce my long positions if you have any. And for shorts, initiating below the monthly pivot makes sense. Yeah, and the signals are quite similar for ZB. And now the major level actually watch is not only the price targets and MFR ranges and everything else, but also the 113.13, which basically I will not explain that math because ChatGPT knows it very well. And if you are not familiar, it's better to ask ChatGPT. But basically, in ZB, that price is reflecting a 5% yield on the 30 basic. So just that, because fixed income traders know that very well. I'm not considering myself a fixed income trader, but I'm familiar with these features because these prices you see, they actually represent something. So it's not some random pricing mechanism. And that level will mean basically 30-year at 5 expectations. So keep that in mind. But same situation. Now we are up on a month. We came back above the base quarterly target, and the next move up would be 216.6, and the next move down you can see. But basically, my view is this: that flows are strong, and the equity market is resilient, I believe is the word. It's very hard to move it down, and for me to change my mind, very simple thing needs to happen. And actually, we are quite far close to that, so we will see. We need to have 1 or 2 closes below yearly open, then the downside targets will be very, very probable. Usually that's how it is. And until then, I don't know what catalysts we will have or news. For me, it's hard to expect all-time highs in past next week. Just market opens, couple of days, bam, bam. Of course, everything is possible, but I would expect the grind to continue. And for me to start thinking about areas to short here, watch the yearly open. So that's it from me. I see that we have quite a couple of questions on YouTube channel, YouTube chat. So at least one is for me. Oh, at least 2 are for me. So first, SKP has 2 questions. So why will price targets be in the form of a script, or will you simply publish the levels? No, TradingView scripts, they will harm more than they will help, because then you will start checking levels on random penny stocks, and so at least in the beginning, I need to do, first of all, very good explainer and education. That's why I think that also some live streams in the middle of the month, or bi-weekly or monthly, where you can ask questions, will be required. And maybe actually it's a good idea, so for elite subscribers, because format will be most likely Excel spreadsheet in the beginning. Later we will add some page to MFR, but the thing with page, it will still have a limited amount of tickers. And now I'm considering Excel spreadsheet with what I think are the most important, and that number will be big. Don't worry. We are talking maybe about 1,000 tickers, more or less. Nothing crazy, but from 500 to 1,000. But I will exclude 10 million market cap stocks for sure, because it's crazy to do that. But in the beginning, scripts will not be published, because for me to, first of all, to publish them, then I need to think how to better present it, and of course explain. But by breakout, another question is, by breakout, do you mean either direction from the key level? Yeah. So you can think of it in a very simple way, in actually 2 sides of the coin. So a lot of people they do what's called mean reversion, or they want to buy the dip when it's dipping. What I mean, let's say SPY, simple example. SPY now is at 600. Of course, I'm taking just a round price, just for example. And you have a downside target of 590. So what would be a wrong way and mean reversion thing? So now you place a buy limit order at 590 because you know why I said that 590 is a nice place to buy. But these are momentum targets. So yes, they are magnets, but for you to be sure that they're working, you need a breakout. And now I will explain. So if a price, let's say, goes below the target and then comes back, you can consider it a breakout. But first breakout actually is on the short side, which don't do, and we will talk about that a lot, which I don't recommend clients to engage in shorting activities. But first breakout, if price reaches 590, is actually to the downside because it breaks. But best is to then wait for break back above again. It's in the scenarios for long positions, of course. Yeah, but and also there will be a newsletter where I cover in more detail levels for I don't know 20 assets, so maybe some Max 7 and major ETFs, something like that, where we will dig a little bit deeper. And of course, it will be another chance for me to give some insights and explain really what it is, especially in the beginning, because it's not trading signals. For someone who is looking at it first time, it may look like it, but that's why I need to make sure. Yeah, and Raghav says a really good show. Thanks for joining, Raghav. Glad you liked it. Yeah, so I'm stopping my screen share. I don't know, so all questions are answered. And one thing to note, but yeah, tomorrow after June ES contract expires, I will tweet. So it will not be tomorrow, but during the weekend or on Monday, I will tweet targets for the next quarterly contract for ES, which is the September contract. So make sure you have alerts and yeah, that tweet will come most likely on Monday.
Thank you, Vai.
Yeah.
Thank you. Can't wait for the videos about the levels and targets. That will be quite good. No more questions, like you said. So we are good.
Yeah, Ted already had to leave. Very big thanks, and we are really happy to have Ted again to give us a proper macro view. Yeah, so again, same thing. Next 2 weeks will be interesting for sure. Manage your risk. Thanks everyone for joining. Thanks, Raphael, and see you in 2 weeks, hopefully. Bye, everyone.
Thank you. Bye bye.